welcome to another video with Invest with the Doctor. Today I'm going to be talking about gold, how to buy, and the pros and cons of buying gold as an investment. So I'm going to be mentioning a brochure that I saw. It's from Pure Gold Company, which is a British company selling gold coins and bullions. So this is a PDF that you can directly download from their website, and it talks about gold investment. So if you look at the brochure itself, they're asking, why do people buy physical gold? And it says, when you think of gold investment, think about long term. So how long you're going to be holding on to the investment. So this is quite important. The length of time that you will be holding the investment is quite important. For many, they say the thing they are really looking to protect is their purchasing power in the face of soaring inflation and poor stock market returns. Saying if you're holding on to cash right now, you're basically watching your actual wealth drain away in front of your eyes, even if the pounds and pence value looks the same. What are you really trying to achieve? The question is, what's led to your wanting investment growth now? What's led to your wanting investment growth now? Are you trying to keep up with inflation, or simply hoping for a better return than you will get from leaving your money in the bank? Provided you are considering this as a long-term investment, then physical gold bullion could be an attractive option for you. So they're talking about long-term. As I mentioned before, if you're getting gold bullion or coins, you have to consider this question, and it's quite important. They say, however, if you think you have sniffed an opportunity to make a fast buck on rising market, then we are going to advise caution. Just like purchasing property, there are certain costs involved in both buying and selling physical gold. And if you decide to have your metal stored securely, then this is typically paid for upfront. Even if the markets move the way you want them to, you will have to overcome these costs before you can see profit. So there is a cost for storage. A safe long-term bet, we can't predict the future, and nothing is guaranteed in life, but the fact is that over the long term, the price of gold has always risen. It has always been in demand right back to Egyptian times, and it remains in strictly limited supply. While you cannot rely on the past to predict the future, gold has an excellent track record over the long term. Again, emphasis on the long term. UK minted gold coins are especially tax friendly. Investment grade gold or bullion, whether in coin or bar form, is not liable for VAT, value added tax. UK minted gold coins, as long as you are a UK resident, you can purchase Royal Mint produced gold coins VAT free, value added tax free, and enjoy any subsequent profit you make from them without having to pay any capital gains tax. This is one of the reasons gold coins tend to cost more than gold bars for a given pure gold content, and why the demand for gold coin is so high. The fact that you're not paying capital gains tax on them. Why are UK minted coins given the exemption when almost any other investments you can think of would be liable for capital gains tax? It is simply because due to their ongoing status as legal British currency. So they are considered legal British currency, which is why you're not paying capital gains tax on the coins themselves. Why the spot price is both key and a little misleading of gold. The spot price is the live price of pure gold as a commodity on the open market. It is based on the deals that are actually happening at the time, and hence reflects the impact of global supply and demand. It is usually given as the price per troy ounce, with the price per gram a subsequent calculation. Traders in gold bullion use the spot price to calculate the retail price of the gold that they are selling. There are things like manufacturing costs and the general demand for that product that can add significant premium to the price. So you're talking about storage, and then you're talking about premium because of the manufacturing of things like the coin themselves. The product that is likely to be closest to the spot price is a large gold bar. These are extremely expensive items and there isn't a large secondary market for them, which can make selling a problem. They are also subject to capital gains tax for the individual investor. So these are probably best left to governments and large institutions. So, did you know you can tell how much pure gold is in a gold coin just by knowing the weight of the coin? You also need to know how fine the coin is. In other words, what proportion of the coin is pure gold and therefore can have the gold spot price applied to it. For example, UK Britannias manufactured since 2013 are the finest, containing 24 karat gold, which is why they display the unique pure gold coloring. UK sovereigns pre-2013 UK Britannias and South Africans coins have 22 karat gold, meaning there is less pure gold content per weight of the coin itself. So bullion, so big bars and stuff are out of the question. They're more for institutions. What you could probably get without occurring capital gains tax and VAT is the coin. But for the coin, you would need to know how many karat gold is it. Is it a 24 karat gold or a 22 karat gold coin? UK minted coins can be completely tax-free, including capital gains tax for UK residents. So which option or mix of options is best for you really comes down to your circumstances and understanding what you are trying to achieve by investing in gold. Now they're saying that they are able to maintain competitive pricing by exclusively working with clients who are looking to purchase £5,000 or more worth of physical gold. So if you want to work with pure gold, they are looking at £5,000 investment to buy gold from them. And they're saying, and we always pay more for gold that is fully authenticated for obvious reasons. So you need to have a gold certificate as well. So when you buy gold, you need to keep the gold certificate because that's the authentication that you're getting, that the gold that you've got is actually worth what you think it is. So again a little bit of a hurdle when it comes to gold itself. So at home, so where to best store your gold bullion? They're saying there are a couple of options. At home for secure storage facility or in a secure storage facility. So option 1, storing your gold at home. If you're looking for the ultimate in control of your wealth, it is hard to beat having physical possession of your own gold on your own property. This completely removes counterparty risk for the equation as there are no longer any counterparties involved. It is in your hands and your hands alone. Things you will need to consider include security aspects such as being mindful of who you tell and installing your own high quality safe. You also need to consider the impact of storing physical gold at your home on your insurance premiums. Certainly saving money should not be your main driver if you're thinking about home storage. So your home premiums are going to go up. You'll need to have a safe storage to keep them at home if you're keeping the gold bullion or gold at home. Option number 2 is storing your gold in a secure storage facility. The easiest, in their opinion, place to store physical gold is with the London Bullion Market Association, LBMA, London Bullion Market Association member Secure Vault in the UK. We can also arrange this for you at one of the facilities we use ourselves. Our clients specifically benefit from their gold being fully segregated and allocated, which isn't always the case with other brokers. Always check this. So that's another bit of a hurdle, that your gold might not be segregated and it has to be. By fully allocated, we mean that all of the gold you have purchased has been legally assigned to your name. Fully segregated means that your gold has been physically separated from other clients' gold and is being held within your own account or box within the vault. The cost of secure storage varies depending on how much gold is being stored, but is typically between 0.65% to 0.95% of the gold value per year, or in other words, comparable to the annual management costs of a typical actively managed fund in an ISA or pension account. So This is if you're storing it in a vault with them. So they're saying, is there a good or bad time to purchase gold? The vast majority of our clients made the decision to buy gold for wealth protection. Any potential for investment growth is seen as a nice bonus if it is a consideration at all. This is really important. The fact that they're saying that if you're getting bonus on your price, if the price is going up, that means you're getting on a bonus on the price itself. Otherwise, it's just to protect your wealth is why you would buy gold. Long term, we know that the value of gold has always risen. Big rises have tended to occur when investor confidence in economic markets is low, as gold is seen as a valuable hedge against other forms of investment, as well as being an important protector of wealth. Historically, in good times, the price of gold has looked relatively stable. So if the times are okay, everything looks okay, then the price of gold will probably not go up. If you shop around, you will see most internet shops that sell gold sitting within a comparable range of pricing for any given product, assuming they have it available. But occasionally you will see something different, a digital gold offering that talks about physical gold investment without the restrictions of coin or bar weight. The presence tends to be on the lower end of the scale, and there is a reason for that: fractional ownership of the gold itself. With fractional ownership, you don't own an entire physical gold item that you can take away, store, look after, and sell yourself. Instead, you own a fraction of a bigger bar that remains in the possession and control of the digital gold provider. You still pay storage charges, but you are relying on the counterparty to be in a position to pay you and be willing to pay you a good price when you choose to sell it. It simply isn't the same deal. Now, there are other things like paper gold, which I'm going to be talking about in a separate video. So basically, this is it. This is the brochure that I was talking about. And if you can see, I've mentioned quite a few things for the gold. If you want to buy gold itself, this is from the Pure Gold company itself. Like I said, to get bullions or bars is expensive. You would be better off getting the coins. They are tax-free and VAT-free. Storage is a problem. You can store at your own place, but it's a risk, and your insurance for your house is going to go up if you keep it at home. And then it's quite risky because anything can happen. Or you can have it stored with them, and there's going to be a cost involved. Gold bars themselves are not very liquid as opposed to having the coins which you can sell easily, but the coins are a bit more expensive to buy. So having said all of this, let's go to the chart of the gold itself. So the ticker for gold is XAU, XAUD. That's the ticker for the gold itself. If you look at the chart, this is the weekly chart for gold. At the moment, it is basing. This is a basing pattern, so it's sort of stuck in this range at the moment. But the good thing is that the 21 day is above the 50 day, which is above the 200 day. So it's moving in the right direction. It is a bit overbought at the moment. As you can see, MACD is positive. So at the moment, I would say this may not be the ideal time to buy gold looking at the technical chart itself. I would rather wait for it to break out of this area itself. So if it's breaking out and moving up, that's when I would think of trying to buy gold. Now, having said this, I'd like to put a little bit of a disclaimer again. As I've mentioned before, the thoughts in this video that I'm presenting are my own. I'm showing you my research and what stock commodity I find useful to buy. Please do your own research and see if this makes sense to you as well. These are free videos on the internet. I'm not in any way affiliated with this company, nor do I have a crystal ball which would show me what would happen to the price of stock or commodity. In my spare time, I'm researching the stock and commodities, and I'm just presenting you my research. When to buy the stock or commodity and how much you spend buying the stock is entirely up to you. I don't know your background and cannot recommend how much you should be spending to buy. I can only show you my thoughts and my research, and the rest is up to you. If you like this video, please like and subscribe to the channel, as I will be making more content like this in my coming few days. The next video, I'm going to be talking about gold and silver, which is going to be tomorrow. And then day after tomorrow is going to be the third video in this series, where I'm going to be talking about paper gold and how to buy. So do watch all these 3 videos. You will get a better understanding of how to buy these commodities, and you will get a picture of what you should be buying and in which way you should be buying. As I said, like this company, Pure Gold Company, would be happy for you to buy gold from them, but the investment would be around £5,000 for them to make it worthwhile for them and for you. So quite a few things to think about. My second video is going to be also about gold and silver, which will be tomorrow, and then day after tomorrow is going to be paper Bitcoin. So as always, thanks for watching.